Hi, everybody. I'm Jeff Barton, and welcome back to the Mortgage Minute. We're here almost daily on LinkedIn and Facebook, Twitter, and Instagram. This larger show that we do on the weekends on the radio, 5 stations in 3 different states from Albuquerque up to Las Vegas, certainly in the Inland Empire, a couple stations there, and out in Tahoe area. We appreciate everybody that listens. If you want to see the show, this portion, or the longer versions, go to Jeff Barton, the Mortgage Voice, and that's on YouTube. That's our YouTube channel. Hundreds of shows there for you to see and catch up on what's been happening. The election is over, although it's not quite clear exactly who won. But at the same time, how does that affect your mortgage rate and your ability to get out there and get a loan? Well, it really doesn't affect it at all. The only thing I can say is that mortgage rates have ticked up a little bit, and let's get right to that. Mortgage rates today, and today is Tuesday, Taco Tuesday, by the way. 30-year is a 3.01%, 15 is at 2.48, the FHA is at 2.45, the jumbo loan is at 3.42, and the 5/1 ARM is at 2.88. All of these are pretty good rates. The rates have remained in this range, probably within the eighth either way for the past 3 months, and we foresee that probably continuing. We don't see any indication that there will be tremendous rate upheaval when and if the election is finished and the new person or the old person takes over. And so in regards to all of that, just be aware that the bond market is really where the mortgage rates are originated. And as we all know, the Fed continues to buy mortgage-backed securities as well as treasuries, so that's not going to change anytime soon. And it really puts the thumb or the foot or the knee onto the scales of supply and demand. Obviously, if you've got a ready-made market that guarantees purchase every single month, well, that's going to obviously affect price, and it really has. Price meaning yield. When the yield remains at a certain level, that means mortgage rates will be at that level too, and that's exactly where we are. A couple other things, tidbits of information that's out there currently in today's world. Forbearance extension through 12/31, that has happened. We're probably going to see the extension of the forbearance period. That's for those people that want to apply for their forbearance. If you're in a situation, especially now where we're seeing layoffs, or we plan to see more layoffs just because we don't have a stimulus package, and some of the larger companies have begun to lay off even more. Airlines, for instance, retail, obviously, and anybody in the restaurant or bar scene who needs who has a job is probably looking to, if we get more of a COVID uptick, which we are in significant amounts in a lot of the major cities, we will probably get more of a shutdown locally. I don't know if we'll have a major shutdown nationally. And in regards to that, we probably will get some national mandates to wear masks and wash your hands and keep social distancing. I think that's all in our future. And that may drive jobs down for certain industries, and that's what we're talking about here. Serious delinquencies are about 1.2%. Serious delinquencies in this particular article I read were over 150 days old. So if you went into forbearance, i.e. you can't pay your mortgage, can't pay your rent, and that happened in April or May, you can see, 5-6 months later, you're still not able to pay your bills because you don't have a job. Now, we may see a stimulus package. It may not be the $2.2 trillion that they were looking for prior to the election. If, in fact, we get a similar Congress, we're probably going to see something in the nature of $1 trillion. That's my guess, only because I know that the leaders in the Senate want to have it at about $500 billion, and the leaders in the House want to have it at $2.2 trillion. So there you go. It's probably going to be a compromise. It's probably going to be less than half, and that's where I think we're headed. Let's see. That's all we have really today. There's one other thing. There's a new commercial lender out there that maybe you'll be interested in. It's called Commercial Mortgage Depot, and within their several products are some interesting ones. I'll just point out one. They have stated commercial loans on 1 to 4 investment units, mixed use, 5+ units, warehouse, office, retail, self-storage, auto repair, up to $5 million, minimum credit score 650. That's interesting because if you're stating, i.e., this is what I make, probably have to back that up with bank statements, some kind of deposit statements, but it's a whole new level of lending that is coming back to the market. Commercials turned somewhat interesting. We went through a bunch of the numbers last week on the radio show, and again, Jeff Barton, the Mortgage Voice, you can see that on YouTube. We probably went through 10, maybe 15 different lenders, and some in the conventional mortgage market and some in the commercial mortgage market. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks for tuning in. Thanks for listening. We'll see you tomorrow.